Hey, what's going on YouTube? Here's the dollar on a daily. Looks like I got a little push for today and then a pushback as price closed below yesterday's high, making a nice top, spinning top. So we'll see what happens. All these candles need to be confirmed, so could be just one of those breakouts and retracements. So a bullish retracement could be coming in on the dollar. You can see the breakout on the weekly chart. Looking for a run up to the next previous highs, which is 98.50 or so. Maybe a little bump and run at 98. That's all that's going on here, but for the longest time I thought this was all bearish. We got huge tops, 1, 2, 3, 4 lower highs, blah blah blah, broke down, and now we're back above the 34. So anything can happen, but there we are. We're trying to get some bearishness on this dollar so that gold and silver will go up, hopefully. But you know, we waited 4 weeks for it to pop, so we had some good runs in the mining stocks, especially gold and silver. But we'll see where we end up for the week. Let's look at the bond. Things are still not good out there, and we did U.S. 10-year yield did have a reverse head and shoulders, waiting for a flat top break. Maybe push us into the 70 range where the previous highs are. So that would be the push to 170. But reverse head and shoulders don't always become bullish. Not all patterns are always doing what they're supposed to do. So if we do break it down, look for a break below 155. And as we make an opposing point at that point, the right shoulders, the angle of the trend line is usually really steep. So any kind of breakdown usually is pretty violent. That is with any patterns that don't go in the right direction. A failed pattern usually breaks down violently. So see what happens. It looks bullish. As you can see, the price goes over the 34, comes back into support, and now it's bouncing for today. Look for a push to 170. No, it still doesn't look good though. 1.7% yield on a 10-year bond. I wouldn't buy it. S&P looks like we got a double top working. It did make a new high, but it could be one of these rounding tops. We did have a hammer, now confirmed a hammer. It could have been a hanging man, but it got knocked out and confirmed a hammer off support as price blew past the top of that range, 2160. So it blew up, making it another high on S&P, but from what I understand, analysts out there are all saying that, you know, negative interest rates are here to stay, and now they're coming out with the facts that the reason why the S&P is not going down is because of negative interest rates. I'll attach that to hyperinflation, so I don't care what else is going on. I think they're printing the hell out of the dollar to keep everything running smoothly, and I don't think they're telling us about it. It's off the books. Let's look at maybe a weekly You can see the newer highs on the S&P. Never stops. I don't think it matters. Whatever the price is, it's fake to me. Everything's fake. So it looks like I had a very convincing breakout on a monthly chart. We still got a week and a half or so, I think. But monthly chart looks pretty bullish. Deutsche Bank, and I'm not sure if everyone notices, but Deutsche Bank and the German bond have gone lock and step for the past since I've been covering it. So high frequency trading is the reason why this is all going on. Why does the charts look the same on a lot of things? It's high frequency trading. So here's a reverse head and shoulders. We had that AB bottom, making the head, popped, came back into support. Again, gonna break that 0 mark, maybe get us to 10 cents. Whoop. That'd be nice, wouldn't it? 10 cents on your 10-year bond. Nice. So everything looks good. Deutsche Bank and German bond are going up. They hit a bottom, but I think it's going to be short-lived. So far, nothing on the long term that is adding up to be anything significant. So we'll see where the week ends up. It's well below, on a long-term chart, well below the EMA 8 and 13 and the 34. Again, though, it's been coming down for so long. I mean, you can pull a rubber band all the way back so far before it has to come back to its natural points. So this might be it. We got a 2-bar pattern that is bullish. Look for a break above this candle, the hammer. Look for a break above that, which is previous lows and the EMA 13. That would be the reversal, and then it would keep this hammer intact, where once it broke down, this hammer became a hanging man. But now it's a hammer if we can get above the top of it. Lots of confirmations going on. German bond, same thing. Looks, high frequency trading. It looks the same damn, except when you get to the longer term. Maybe, I think. No, they're both terrible. So on intraday, it looks like practically the same. But then when you go a little bit longer, it gets a little bit skewed. But got the same thing going on. Got a previous breakdown, and now a bullish retracement, or a bearish retracement back into resistance on both of them. More so on the German bond, but Deutsche Bank does have a little leg. And anything above 50% of that last green candle would signify a churn. Nothing yet. Just the dailies and the shorter terms are anything nice, but other than that, it's nasty. Got oil. I want to get above that line, which is obviously our major trend, the SMA 34. We have a breakdown from previous, and it looks like it wants to do something. Let's see what happens. If it breaks back inside the pattern, we got maybe back and forth action. But right now it looks like it broke down, bearish retrace back in resistance, came back down, bearish retrace, back into resistance, came back down, and now another bearish retracement. So I think the goal on this is to get to 40, but I think it'll come down to previous highs, which is 42 to 42.50, I think. But longer term, you can see the longer term SMA 34 hanging tight. So we had a long downturn. We got prices coming over the 34, rejected. Bearish retrace, rejected. Got double bottom. Came over the 34, bullish retraced all the way around, and now it's going to take it looks like a major bullish retracement back into support to gather its legs so it can go higher. Gold, obviously, hope everyone felt the pain today. I thought gold was going to turn around, make a nice U, but it took another leg down instead. Another leg down back into support, which is the previous high and the previous lows. So we're at support. Obviously, we got the SMA 34 on a daily hanging right there. And we're still above the EMA 8, which I was hoping price would hang out for a while, where the 8 would come up and meet it. Now it looks like price is influencing the uptrend that it had. It's kind of churning. So it was pretty nasty. I think from the top, 1372 all the way back down into 13. So we're looking at, 65 points, something right around there. Pretty nasty for the past couple weeks, but we're still hanging in there. I was hoping for a quicker churn, but now that it took another leg down, I think it's going to take a while for us to recover, unless we see something just fantastic bounce either tomorrow or Friday. But we're at support, so be careful when it breaks down into previous highs and supports are being broke down. Again, I thought gold was going to have a little bit of a breathing room. I thought it was looking good on the consolidation, on the churn. I thought it was going to cross here, but it did. It actually did cross, but it got rejected. So there we go. And this shit always happens in the middle of the night when you can't do anything about it. And the next morning everything gaps down and you're like, alright, nothing to save. But we need to improve this candle so we don't have a couple more months of retracing. You can see the breakout and then now the nasty falling star. Got a hold, we got a bounce, we got a couple days to get out of this mess. Otherwise, we're going to be coming down into support on a monthly chart. And monthly charts take months. So I don't want to see that to happen. Silver, again, nasty fall. I had a feeling silver was not done falling yet. And I'm thinking it's going to come down all the way down to our support level, which is the 1850 long-term chart. So let's look at the long-term chart. That 1850 is pretty the start of previous lows. This long consolidation right here, where it came down really hard, bounced, rejected, bounced, rejected, and then broke down right here. So 1850, it could be wanting to come back down into support. at 1850. And that is a nasty candle on silver. If it closes the month on that nasty candle, I'm not going to rule out the fact that it can come down and make new lows below 14 on a monthly chart. We did have a nice breakout, but that is being heavily rejected right now. So we need something to happen in the next couple weeks. Hopefully we don't close on a nasty falling star on a monthly chart, because it could be one of those pump and dumps where everyone's going into a sector and then they just pull the rug out and steal everybody's money, which is highly probable. Gold, let's see, copper. Copper hasn't broken out yet, but you can see that flat top break coming in, or, you know, the slight angle, but it looks good. I think copper's got a chance to make a run as soon as it breaks that top. So keep an eye on that. We got nugget. It looks like nugget's in at support. So what happened here? We got a left shoulder, right shoulder, flat top break. Right? Gapped, ran, boom. Came all the way back in. This is a good time to buy it, I would say. That's on the daily chart though, so be careful. Longer term, we are at support, but that is a nasty, nasty candle. We need some kind of bounce next week. And this is what happened to the stock I bought yesterday. I'm not going to say which one, but it broke out, and then even after hours is trading up, 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 up. And then all of a sudden, all this crap happened in the middle of the night. And you wake up and you're like, oh, the market's down. I'm going to get ready to get out. Well, by the time the market opens, there's nothing you can do about it. I mean, it gaps down. And my stock broke out, came all the way back into support, but mine kept going. So it's just the luck of the draw, I guess. But I think that looking at this, reverse head and shoulders on a weekly chart, it broke out, came back into support. I'm thinking it's going to bounce pretty hard here, but we have to wait and see. We've got 2 days to get a bounce out of this for the weekly candle. Maybe 50% of this candle would suffice on a bounce coming into the next week. Ultimately, you want to close above previous highs though. So down, nugget down 20 or 17%, probably closer to 20 after you count that wick on the lows. But you can see the breakout. You can see the reverse head and shoulders. You can see the flat top break. You can see it coming all the way back in, bullish retracement into support. But it's got to hold. Bullish retracements are one thing, but if it doesn't hold support, I mean, this thing can hold, the whole thing could become crashing down. Just very scared of how the action was today on these big boys. I mean, 20% down on a $125 stock. That's pretty nasty. JNUG, same thing. These are monsters. And you can see the same thing. The daily chart, reverse head and shoulders, flat top break, boom, all the way back in to support. And you can see that neckline support. Let's see if we can find it here. You can see the breakdown. And then you can see, ooh, previous high, and the next opposing point. You can see the support. Now, how easy would it be just to break down that thing if you had billions of dollars? I don't know, but something crazy. It broke out and came all the way back down to where it broke out. It's huge. All I can say is it's a good time to buy, but just be careful that it doesn't break down further. Just to take a look, let's look at the GDX. Same thing. The only reason why I did Nugget and JNUG today is because I had a comment about Nugget. I don't think GDX is done coming down. Could, but I don't know. And same thing with GDX. Oh, this is GDXJ. Same thing with GDX. So why do all the stocks look the same? It's high frequency trading. It's the only way to put it. Where money is sloshing back and forth, right, between brokers or between machines. I think they call them black boxes at the Federal Reserve. Anyways, and all they're doing is shaving off pennies. So they manipulate, or fractions of a penny. So they manipulate all day long, high frequency trading, shaving pennies, fractions of pennies all day long. Looks like a pump and dump. Be careful that prices don't go below. I mean, that was a pretty nasty drop today in gold and silver, or last night. And then the continuation all day. So just be careful. Watch for anything on the downside. Could get nasty. I'm not sure. But we are at support. So thanks for commenting. Thanks for all you guys' support. And I really do appreciate it. I feel like I'm saying the same thing every single day. So it gets a little tiresome, but I won't forget about you guys. It's 1,000+ of you now, and I think that's amazing. I was never professionally trained. I learned all of this on my own. All this, well, not on my own, of course. You know, books, mentors. When I was younger, this stuff is fascinating to me. Support lines, resistance lines, finding that golden ratio. That 34 splits the waves in half a lot of the times, and you watch the action between price and the 34 on longer term charts. You get the inclination that you can trade back and forth off that 34 on a regular basis, because price always comes back to the 34 on the long term. So, and then I use my EMA 8, my EMA 13 as my previous lows, previous highs, support, resistance levels. So then when I get price in between the 34 and the EMAs, you start to get a pinch. So let's see price come in here, pinch, 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 and see if we can get it higher. That's basically it. I don't use indicators unless I'm trading. The OBV and volume is probably all I will ever use ever again. It's fun to use some reverse, inverted Fisher transform RSIs and all sorts of crap and make it complicated. But those are just indications of where the chart is. So use your charts, use the candles, know the candles patterns, and watch price go over these for support. You can see the breakdown, you can see support coming back in, longer term support. I just think it's real easy. These EMA 8 and 13, those are your trend lines too, if you haven't recognized that. These are your trends. And the ultimate trend is the 34. So, hope you guys like it. I try to keep it real easy, and it is, but at the same time, there is so much to this. I hope you don't think this is like like real easy, because there's so much out there that you can learn. But when you tie it all together, this is what I came up with. Okay, that's the point. I found the center of the waves. I found support. I want to stay above the 8 at all costs on every chart, and use the strategy like say on a 60-minute. You can see the breakdown on a 60-minute. See, on this one, the 60-minute closed below. Well, closed below here too after the last run. So a close below the 60-minute here. That's where my first sale is. Okay, so this thing kind of did a W. Then it broke out, made new highs, and then it came back in, closed below the EMA 8 on a 60-minute chart, so I would have sold. For the second time. So you kind of phase in, phase out, or you can go all in, all out. I do that a lot. But to keep it safe so you don't miss anything, like if I would have gone all out on that first close below the 60-minute EMA 8, I would have missed out on this nice W and a nice run. But then if you scale out, so you scale out once, you take the ride on the second contract, and then you scale out from here, which is the previous high over here. So there's so many different ways to do it, but ultimately you can see the breakdown on a 60-minute chart very clearly. You watch for that bearish retracement after the cross. So that's it, guys. I appreciate it. Let me know what's going on out there. See ya.